So we are moving to the last concept of this chapter, composition scheme, section number 10. Very important composition scheme. So let us start discussing that. Let's proceed. So let us proceed with composition scheme. Sir, composition scheme, composition scheme is a optional benefit or scheme given to small taxpayers. Sir, what do you mean by small taxpayers? Sir, I mean by small taxpayers whose aggregate turnover in the preceding financial year is not exceeding 150 lakhs can enjoy composition scheme benefit in the current financial year. So what is the advantage of composition schemes? Or the advantage of composition scheme is they are supposed to pay taxes at composition rates which are very small, that is 1%, 1% and 5%. So they need not pay taxes at normal rates, number one. Next, number two, they need not pay taxes on monthly basis, just quarterly basis is sufficient. Number three, they need not file the returns on monthly or quarterly basis. If they are filing one return for the entire year, that is more than sufficient. Clear? So those are the benefits. For those benefits to be available, if you are eligible for composition scheme, you can opt composition scheme. But who are eligible for composition scheme? Whose aggregate turnover in the preceding financial year, does not exceed 150 lakhs. But if you are in special category states, what is the threshold limit? 75 lakhs. The threshold limit is 75 lakhs. Sir, what are special category states? You know the special category states. What is the code for us to remember the special category states names? What is the code? Do you remember, ma? The code is, sir, 75 lakhs in case of special category states, that is stunning, ma'am. 8 states. So stunning, ma'am. Sikkim, Tripura, Uttarakhand, Nagaland, Manipur, Mizoram, Meghalaya, and this A stands for not Assam, it is Arunachal Pradesh. Remember, stunning, ma'am. Why ma'am is stunning? Because she is watching the sunrise at Arunachal Pradesh. Okay, so that is why ma'am is stunning. So this is the code for us to remember. So these are the special category states. In these special category states, if you are doing business, sir, your threshold limit is not 150 lakhs, it is 75 lakhs. So the concept is simple, sir. In aggregate, in the preceding financial year, if your aggregate turnover is not exceeding 150 lakhs or 75 lakhs as the case may be, current financial year, you're eligible for composition scheme. Okay. So see, for example here, sir, I am starting the business in 2021. Okay. And I'm registering under GST. Whether I'm eligible for composition scheme or not, sir, 2021, whether you are eligible or not, that depends upon your aggregate turnover in the preceding financial year 1920. Sir, in 1920 I was not at all doing business. That means your aggregate turnover is 0. 0 is less than or equal to 150 lakhs. Yes, you are happily eligible for composition scheme. So first year everybody are eligible for composition scheme. You have the benefit. If you want to take it, take it. Next, 21-22, whether I am eligible. For that I should see 2021 financial year. The 2021 financial year aggregate turnover is 123 lakhs, sir. So 21-22 financial year you are eligible for composition. Same way, 22-23, sir, you are eligible or not, that depends upon 21-22 aggregate turnover. Sir, it is exceeding 183 lakhs. So here I cannot go for composition scheme. So that way, if you see, sir, every year you should keep on checking the aggregate turnover in the preceding financial year. So based on that, you are eligible for composition scheme. Am I clear, my everybody? Right, super. The students, like, when I have asked so many questions, nobody replied, or very few of them replied. When I asked what is the code to remember this special category states, now these people, like, especially I have seen, like, all the replies are from boys only. Stunning, ma'am, stunning, ma'am, stunning, ma'am, stunning, ma'am. Unprofessional fellows. Right. So the point is, sir, we will see aggregate turnover in the preceding financial year, and based on that, whether you are eligible for composition scheme or not, we will decide. So every year this is a process which you have to check. So that means I can say happily, sir, composition scheme is valid only for maximum 1 year. Not 1 year, maximum 1 year. Why maximum 1 year? I'll tell you later. So now coming to the point, sir, this is what the condition. But if you are located in special category states, it is 75 lakhs threshold limit. Now if you see, for example, so this is the story. See, for example, sir, Vivar Notebooks Private Limited, or Vivar Private Limited, is dealing with goods registered under GST. They're having 3 branches: Telangana, Karnataka, and Andhra Pradesh. In all the 3 branches, they are registered separately, and they are doing this much of turnover in 22-23. in 22-23. Now, sir, the first question is whether they are eligible for composition scheme. They are eligible for composition scheme in the financial year 23-24, that is the next financial year. That depends upon 22-23 aggregate turnover, sir. What is aggregate turnover in 22-23? Sir, aggregate turnover in 22-23, if you ask me, what should be the answer? The answer is aggregate turnover is not taken branch wise. It is pan-India basis with the same pan wherever you are registered, wherever you are doing the business, all that to be added. That means here in this case, I should add Telangana's turnover, Karnataka turnover, Andhra Pradesh turnover. So if you see, aggregate turnover means pan India basis, whatever is the turnover, whatever the outward supplies are there, that I should consider, sir. Here if you consider that, sir, it exceeds 150 lakhs in Andhra Pradesh alone, it is exceeding 150 lakhs. So aggregate turnover, obviously it is exceeding 150 lakhs. So what you should do? You cannot offer composition scheme in 23-24 financial year. Everybody, is that clear till now? You cannot take composition scheme benefit in 23-24 financial year, because in 22-23 your aggregate turnover is exceeding the threshold limit of 150 lakhs. But sir, I have a small doubt. If at all here it is not 152 lakhs, imagine if it is 10 lakhs, then if it is 10 lakhs, then sir, if it is 10 lakhs, then aggregate turnover, if you see 58 lakhs, 76 lakhs, 10 lakhs, all put together, it comes around 144 lakhs. In this case, then aggregate turnover is not exceeding 150 lakhs, it is only 144 lakhs. No, if you see from Telangana, aggregate turnover is 144 lakhs. If you see from Karnataka also, if you see from Andhra, sir, from any part of the country you see, aggregate turnover remains the same. Please understand that. Any part of the country, if you see aggregate turnover remains same. So now, which branches are eligible? All the branches are eligible for composition scheme. Every branch, sir, 3 registrations are there. All the 3 registrations can go for composition scheme. Are you able to understand? But even if one branch becomes ineligible here, or let us assume Karnataka branch says, I don't want to go for composition scheme, I will go with normal scheme. What others should do? What others should do? Other branches also becomes ineligible for composition. Other branches also will become ineligible for composition scheme. So I repeat, if all the branches are eligible for composition scheme, all of them should go for composition scheme, or all of them should go for normal scheme. Some registrations going for normal scheme, some registrations going for composition scheme is not allowed. And if one branch becomes ineligible for composition scheme, then all the branches becomes ineligible for composition scheme. For example, sir, here it is not Andhra. Imagine it is Sikkim. Sir, if it is Sikkim, sir, what is aggregate turnover here? Aggregate turnover is again, it is 144 lakhs. Telangana is eligible for composition scheme, yes. Karnataka is eligible for composition scheme next year, yes. What about Sikkim, sir? Sikkim's aggregate turnover, if you see 144 lakhs, Sikkim turnover is 10 lakhs. Sikkim side, if you see aggregate turnover, again I should take from pan India basis, so 144 lakhs. But what is the threshold limit in Sikkim? In Sikkim, the threshold limit is 75 lakhs, but here aggregate turnover is 144 lakhs, no? So Sikkim becomes ineligible for composition scheme. So when Sikkim becomes ineligible for composition scheme, sir, even Telangana and Karnataka becomes ineligible for composition scheme. That means if you have one branch in special category state and other branches in non-special category states, then understand, sir, the threshold limit will fall down from 150 lakhs to 75 lakhs. Are you able to understand? The threshold limit will fall down from 150 lakhs to 75 lakhs. So that is what the concept here. So there are the same questions here. So hope it is clear for you. Okay, the concept is clear. Now, my first doubt is, sir, what do you mean by aggregate turnover? Sir, you are saying pan-India turnover, all that stuff. But what should I consider for aggregate turnover? Sir, when you are going for aggregate turnover, please understand, aggregate turnover means important definition. This is aggregate turnover. Yeah. So aggregate turnover is a pan-India turnover. So you should take these things on pan-India basis. Sir, what and all I should take on pan-India basis? Of course, sorry, I have written here all India pan. all India pan basis or pan India basis, whatever it is. Sir, I should take all taxable supplies. I should take all exempt supplies. I should take even exports. I should take interstate supplies. Everything. Sir, interstate supplies and supplies between distinct persons also, or whatever is there, you should consider that. Simple, understand. Aggregate turnover means all your sales, all your outward supplies, no matter whether it is exempt or no matter whether it is taxable, all that stuff. Please understand. Please understand. In your profit and loss account, you tell me, if they ask you a turnover, what is the turnover you are going to show? You are going to show only taxable turnover. You will show everything, taxable, exempt, non-taxable, everything. So you please make sure all your, I repeat, outward supplies, the logic remains the same. The logic is all your outward supplies will be covered in aggregate turnover, but please don't add GST taxes. GST taxes are nothing but CGST, SGST, UTGST, IGST, and GST compensation cess. These taxes you don't add. Any other tax you add, no problem. Any other tax, happily you add, no problem. But these taxes you don't add. Am I clear? That is what the concept. And sir, all inward supplies covered under RCM also don't add in you. Sir, that is my inward supply, sir. It is covered under RCM or whether it is covered under FCM. Sir, the point is it is my inward supply. I should not add it in my aggregate turnover, sir. No, people will be like, sir, I am paying GST on that. It is my liability. So I will add it to my aggregate turnover. That way you don't do. The logic remains the same. Aggregate turnover, the logic remains the same. So it is outward supply, not inward supply. Even though you are paying tax on the inward supply, it is not your aggregate turnover. It is somebody else's aggregate turnover. Just because you are paying the school fees, the kid will not become your child. Okay, so don't take credit of somebody else. So the point is, inward supplies covered under RCM also should not be included in your aggregate turnover. So that is what the point. So we have discussed aggregate turnover definition also. Am I clear with that? One second. So aggregate turnover definition we are clear. So we should add all our outward supplies, but we should not take inward supplies, and we should not take GST. I repeat, any other tax you please add it to the aggregate turnover, but don't add GST. That is one thing. So aggregate turnover we have understood. Okay, sir, if you are going for composition scheme, please understand, sir, based on aggregate turnover we'll do that. So here one small doubt I have is, or you have set to hide. Please understand, Mr. Vishnuvardhan is trader of goods. Mr. Vishnuvardhan is trader of goods. For the financial year 23-24, what I am doing? I am doing turnover in goods, and I am claiming this composition scheme benefit for the next year, that is 24-25. 24-25, I want to take composition scheme benefit. So what I am doing, the moment I touched my aggregate turnover, 149,70,000, I stopped business. Let us assume March 27th, I have touched 149,70,000. If I do business for next 4 days, I will cross 150 lakhs. So what I did, I closed the shop and I am relaxing. Eat 5-star, do nothing. March 31st evening 7 o'clock, unfortunately I am getting a message from a bank. Interest credited to your account 50,000, like that. Sir, interest is nothing but my income. That means I have provided service to the bank, allowing bank to use my money. So for that I got interest 50,000. That is also actually speaking supply of service. Of course, exempt supply, that's a different story. But it is supply of service. Should I add it in my aggregate turnover? No, not required. Always remember, for the purpose of section 10. For the purpose of section 10. Sir, any situation, any calculation, whether it is calculating aggregate turnover, whether it is calculating GST liability under composition scheme, anything, just ignore one fellow. Who is that fellow, ma? Ignore one fellow, that is interest income. Sir, interest or discount earned by way of extending loans or advances or deposits. So whatever the interest or discount income you have earned by extending loans, advances and deposits, please ignore that for any calculation under section 10. For any calculation under section 10, please understand that. Okay, so that way, if you see here, still aggregate turnover remains 149 lakh 70,000. I can happily claim composition scheme in the next financial year as per my plan. That is what the concept. So now, as we are discussing this, I just thought of revising one small point which I forgot. That in composition scheme benefit is available in two subsections mainly, subsection 1 and subsection 2A. Subsection 1 is available mainly for whom? Manufacturers, traders, and restaurant service providers. So for manufacturers, what is the GST rate? 1% of the turnover. For traders, 1% of the turnover of taxable supplies. And for restaurant service providers, 5% of the turnover. If you have identified properly, here for trader there is one relaxation that, or one luxury that, he is liable to pay GST 1%, not on his full turnover like everybody here, turnover. In this case, this fellow is liable to pay GST only on 1% of the taxable turnover. That means, see for example, sir, Mr. Anirudh is selling musical instruments. I repeat, 10 subsection 1 composition scheme benefit is available for manufacturers, traders, and restaurant service providers. And the advantage trader is having, he is liable to pay GST only on taxable turnover, 1%, half percent CGST, half percent SGST. So Anirudh is selling musical instruments, classical as well as Western. Imagine just example, the classical instruments are exempt under GST, Western instruments are taxable. Now, if Anirudh is opting for composition scheme, sir, his sales during that composition scheme, classical instruments which are exempt 40 lakhs turnover, Western instruments which are taxable that are 20 lakh turnover. What is the tax liability under composition scheme he has to pay? Sir, for that we should see whether Anirudh is manufacturer or trader. If he is a manufacturer, he should pay on the whole turnover, that is taxable as well as exempt, 60 lakhs, 1%, half percent CGST, half percent SGST. Suppose if he is trader, he is liable to pay GST only on taxable turnover, that is 20 lakhs. So half percent CGST and half percent SGST. That is what the point. Okay. Till now clear everyone? Fine. Now the next doubt is, sir, I have opted composition scheme. Now I am availing advocate services. Now see for example, Mr. Jolly LLB advocate is providing services to Mr. Leo, a composition dealer, manufacturer of goods. Sir, he is taking legal services from Jolly LLB advocate 10 lakhs, and normally GST rate on them is 18%. But this is a reverse charge mechanism. Who is liable to pay GST? Leo is liable to pay GST under RCM. Okay. Whether Leo can argue, I am a composition dealer, I will pay GST on this at composition rate 1%. No, Rai, you cannot do that, because you should pay GST on RCM purchases at normal rates applicable. Composition rates are applicable only on your outward supplies, not on your inward supplies. Please understand, composition scheme rates are available only on your outward supplies, but not on inward supplies, whether they are covered under FCM or whether they are covered under RCM, you should be paying GST to the government at normal rates, not at composition rates. Composition rates are only for your sales, not for your purchases. Even though the purchase is covered under RCM, you should pay GST at normal rate. You cannot say, sir, I am a composition dealer, sir, I will pay 1%. No, that is not the case. Okay. So this is another aspect. Now coming to the next one. Is Sir, now the point is, even though you are a manufacturer or trader, please understand who are under composition scheme. See, I am selling laptops. Can I go for composition scheme? Yes, I can go for composition scheme. I am selling furniture, I am selling electrical appliances. Yes, you can go for composition scheme. But the problem is, even though I am dealing with goods, sir, it is quite obvious when I am doing some business, my customers tomorrow, if there is any problem, they will come to me only. They will come to me if there is any problem in the goods. So obviously, I should provide them some services. But you say under section 10 subsection 1, if you want composition scheme, you should not provide any services other than restaurant services. So they are giving a relaxation to us. I repeat, even though you are under composition scheme under section 10 subsection 1, there was one beautiful MCQ asked in September 2024 exam. Those who are writing that attempt the MCQ, I don't know whether they have identified that or not. So the point is, we have a discussion in our YouTube channel also regarding the September 2024 MCQ questions. So nice MCQs, actually I loved them, so solving it. So you also please refer when you have time. Coming to the point, sir, normally if you are providing goods, still incidentally you should provide some small services also. That means you are in composition scheme, can you provide services? The law has understood, the lawmakers have understood, yes, this fellow should be permitted to provide some services also. So they are giving us permission to provide some small amount of services, marginal supply of services. We call it as marginal supply of services. That means how much, sir? Na? In current financial year, if you are under composition scheme, whatever the turnover you made in the last financial year in that particular state, for every state this option is available for you. 10% of the turnover in the state in the preceding financial year, or 5 lakhs, whichever is higher, that much amount worth services current financial year you can provide under composition scheme. Now that means, see, for example, in this case we have seen, in this example, if you see, here you remember, here if you remember, in this case, sir, Telangana 58 lakhs, Andhra Pradesh 10 lakhs, Karnataka 76 lakhs. In this case, the aggregate turnover is 144 lakhs. They are eligible for composition scheme. And 23-24, they are opting for composition scheme. Then what they can do? They can provide marginal supply of services. Yes or no? They can provide marginal supply of services. How much? Sir, in Telangana, 10% of the turnover in the preceding financial year. What is the turnover in the preceding financial year? 58 lakhs. 5,80,000 or 5 lakhs, whichever is higher. 5,80,000 worth of services they can provide. In 23-24, when they are in composition scheme also, they can provide 5,80,000 worth services in Telangana. 58 lakhs into 58 lakh into 10%, 5,80,000 or 5 lakhs, whichever is higher. So 5 lakh worth of services, 5,80,000 worth of services they can provide in the current financial year when they are opting composition scheme. Same way here in Karnataka, 7,60,000 worth services, or 5 lakhs, whichever is higher. 7,60,000 is higher, so 7,60,000 worth services they can provide in Karnataka in the current financial year, even though they are under composition scheme. In Andhra Pradesh, 10 lakhs into 10% of 1 lakh, 1 lakh or 5 lakh, whichever is higher, 5 lakhs. That means every state minimum you can provide 5 lakh worth of services. That is not sufficient for you? Of course, sir, it is very much sufficient. Thank you, sir. Okay, so that is how we can do it. Am I clear? Everybody respond, online students. Till now comfortable, ra? Till now comfortable? So that is what marginal supply of services. Marginal supply of services, you can provide 10%, at least 10% of the turnover in the last year preceding financially in that state, or 5 lakhs, whichever is higher. So we have given example also here, so you can just go through that. And I repeat, sir, you can always ignore this fellow, the interest income by way of extending loans, advances or deposits. That fellow you can always ignore. Okay, so please be careful with that. Okay, I told you, for any calculation, marginal supply of services, aggregate turnover, composition, tax liability, everything you have to ignore him. You can ignore him. Okay, now, sir, if you see who are not eligible for composition scheme, see, first of all, one more small point, that the disadvantage in composition scheme is you cannot collect tax from the customer and you cannot avail ITC on your purchases. Whatever you are paying taxes, that should be paid from your pocket only. Whatever the taxes you are paying, that should be paid from your pocket itself. Okay, so that is what the point. Now the important thing is who are not eligible for composition scheme. Who are not eligible for composition scheme, very very important, sir. Who are not eligible for composition scheme, sir? Whoever is providing services other than restaurant services and that marginal services, right? Except restaurant services and mm, 1 second, no? Mm-hmm. Hmm. So now services other than restaurant services, or you can also provide this marginal services allowed, correct? Marginal supply allowed, marginal supply allowed, marginal supply of services allowed. Okay, so if you are doing any other services, that means, see sir, I am selling laptops also and I am repairing laptops also, sir. Both are in equal amount. I am not able to fit in the 10%, sir. Then what should I do? For you, 10 subsection 1 is not available. Go to 10 subsection 2A. That will help you. But what is the disadvantage in 10 subsection 2A? See, now as the situation came, I repeat, if you are not eligible for 10 subsection 1, happily go to 10 subsection 2A. It will help you to go for composition scheme. So the disadvantage there is your threshold limit is just 50 lakhs. Not 150 lakhs, not 150 lakhs or 75 lakhs. Your threshold limit is just 50 lakhs. And one more disadvantage is the composition rate is not 1%, 1%, 5%. It is 6% of your turnover. 3% CGST, 3% SGST. Guys, understand that taxable turnover relaxation is only for trader of goods, not for anybody else. Okay. So remaining everybody should pay on their total turnover. Manufacturer 1% of turnover, trader 1% of the taxable turnover, restaurant service provider 5% of the turnover. Who are going for subsection 2A? 6% of the turnover. That means 3% CGST, 3% SGST. So I repeat, if you cannot go for subsection 1, go to subsection 2A. Okay, fine. Now coming to the point, sir, these now upcoming conditions all are common for subsection 2A also. You should not be dealing with goods or services which are not liable to GST. So best example, what is the best example we can write here? Our favorite bar and restaurant. So if you are selling liquor, it is non-taxable. You cannot opt for composition scheme for your restaurant. Am I clear? If you are selling liquor, you are providing non-taxable supplies, so you cannot provide. You cannot offer composition scheme for your restaurant. Clear? So that is one thing. Next one, sir, you are making interstate outward supply of goods or services. If you are having customers outside the state, that means you are like doing business in a very good scale. I will not give you composition scheme. Get lost. But sir, can I purchase from outside the state, sir, at least? Yes, sir, that is allowed. Interstate inward supplies are permissible. But interstate outward supplies are not allowed. Inward supplies are allowed. After going through these points, you should not make non-taxable supplies. You should not make interstate supplies. You should get a doubt. Just now you taught, no sir, in aggregate turnover, meaning take all the outward supplies, interstate outward supplies, non-taxable, everything you just add. Now you are saying you should not provide all these things. Guys, understand, in the preceding financial year, whatever you want to do, you would have done that. You might have made interstate outward supplies, you might have made non-taxable, etc., everything. But current financial year, if you go to composition scheme, follow all these conditions. Last year I was selling liquor, I was having liquor license, so I was running a bar and restaurant. I sold a liquor for 120 lakhs, restaurant services for 20 lakhs. What is the aggregate turnover? 140 lakhs. But my liquor license got cancelled last year itself, over expired. What is my aggregate turnover? 140 lakhs. Current financial year, am I eligible for composition scheme? Yes. Can I opt for composition scheme? Yes. Will I make any non-taxable supplies? No, because my liquor license is no more. So I can go for composition scheme. Am I clear? Once you are in composition scheme, you should follow all these things. Now one more small point. What if my friends on my birthday, they are giving me a gift? The gift itself is liquor license one more time. Go and sell liquor so you can run a bar and restaurant. Because if I am having license, those stupid fellows only will come and enjoy now. So they are getting a liquor license to me. Now what should I do? I am already in composition scheme. You tell me if I am under composition scheme, if I get liquor license, I will say no, I will not do it. Or if I'm under composition scheme, I get a customer outside the state, I will say no, 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 I will not sell the goods to you, I'm under composition scheme. Now you do that liquor business, or you make outward supplies, interstate outward supplies, and you come out of composition. That is the reason why I told you composition scheme validity is maximum 1 year, not 1 year. So you come out of composition scheme when you violate these conditions under composition scheme, or when your aggregate turnover in the current financial year crosses the threshold limits. That means your threshold limit is 150 lakhs. Current financial year, your aggregate turnover is crossing. Current financial year, your aggregate turnover is crossing 150 lakhs. The moment it crosses 150 lakhs, you come out of composition scheme. Start making supplies under normal scheme, collect tax, avail ITC, pay GST to the government at normal rates. So please understand one small point here for our discussion is, sir, anybody who has opted composition scheme, whether under subsection 1 or subsection 2A, maybe threshold limit 150 lakhs, 75 lakhs or 50 lakhs. Current financial year when they are going for composition scheme, in current financial year, if their aggregate turnover crosses these threshold limits, they will come out of composition scheme. They will start collecting tax at normal rates and start paying tax at normal rates, and they can avail ITC on their purchases also. Am I clear? That is what the concept. So as we were going through the discussion of conditions, who cannot offer composition scheme? Sir, I repeat, if you are making non-taxable supplies or interstate outward supplies, you cannot go for composition scheme. But you could have done all those things, all that nonsense in the preceding financial year. Current financial year, if you are eligible for composition scheme and if you want to go for composition scheme, don't do all those things. Am I clear? Now, next one. Sir, supply of services through e-commerce operator attracting TCS under section 52. Actually, there is an amendment here, so I just forgot to update this point. So you can make supplies through e-commerce operator. There is no restriction here. The only thing is you have to follow the procedure. So I repeat, you can supply through e-commerce operator, but only condition is e-commerce operator should make sure no interstate outward supplies are made. So now if I am under composition scheme, earlier I cannot sell the goods through Amazon, but now I can sell through Amazon because sir, my only agenda is what I am not allowing you to sell through Amazon, because somebody from outside the state will come and buy with you. Now what the law says, the law is giving responsibility, fixing responsibility on the e-commerce operator. The e-commerce operator, make sure this fellow is not making interstate outward supplies. Okay, sir. So I will sell through Amazon also, even if I am under composition. Clear? So that is what the concept. Next, sir, if you are a manufacturer, only manufacturer, but if you are a trader can take, trader is eligible only if you are a manufacturer of ice cream, pan masala, tobacco, manufacturing any tobacco substitutes or aerated waters, fly ash bricks or fly ash aggregates, fly ash blocks, bricks of fossil meals or similar, siliceous earths or building bricks or earthening or roofing tiles, bricks, that's all. So if you are manufacturing all these things, so understand, we are not targeting ice cream in the sense, we are not targeting this Arun ice creams or quality walls, all that stuff. We are targeting our local ice creams that during summer all these people will be bringing that small cart now and selling the ice creams, the local manufacturing ice creams. We are targeting them. We are not targeting aerated waters, means this Coca-Cola, Pepsi, all that. We are not targeting those manufacturers. Of course, they are not eligible for this composition scheme because of their turnover. We are targeting the local goli soda, all these people, and this tobacco substitutes, pan masala, all this. We are not targeting Vimal, Bolo, Juba, Kesari, all these people. We are not targeting ITC, all that companies. We are targeting the local gutka, pan masala manufacturers, all that stuff. No, so that local tobacco manufacturers, all these people we are targeting, because already they are like evading taxes so much, and we don't want to give any other luxury for them of composition scheme. So that is what the composition scheme all about. And here, as I told you, if one person also becomes, and one more thing, small point, casual taxable persons, non-resident taxable persons are ineligible for composition scheme. And as I told you already, if one person doesn't want to go for composition scheme, all other fellows will not go for composition scheme. Everybody go for normal scheme. or everybody go for composition scheme? Abu Ajmal, no. Hope it is clear, huh? So that is what all about composition scheme. There are some small points which you can just go through this material. So rule 5, all that intimation procedural things, you can just manage them. Same conditions, everything applicable for section 10 subsection 2a also. So for you, the next duty is take the screenshot and try these questions. 1 second, I'll just solve them. Wait, I'll just finish it off. So now listen, I'll just solve this. See, now look at this example. Mr. Suresh Raina started business on auspicious day 2nd June 2023 in Uttar Pradesh, restaurant business. Now what has happened now? One fine day, another auspicious day, 2nd September, he has exceeded his aggregate turnover 20 lakhs. For the entire financial year till 31st March, if you see, so he 2nd September, he became liable for registration and he registered. So till 31st March, he made a turnover of 153 lakhs. Now the doubt is, next financial year, whether he is eligible for composition scheme. Why I got this doubt? Now my only doubt is, his aggregate turnover 153 lakhs. This includes 20 lakhs during when he was not registered. 133 lakhs when he is registered. Okay. So now my doubt is, should I consider this 20 lakhs also in my aggregate turnover? The answer is yes. Sir, aggregate turnover means from 1st April to 31st March, whatever you do, that is your aggregate turnover. During that period, whether you are registered or not, whether you are a taxable person or not, it doesn't matter. Aggregate turnover means the entire turnover what you have done from 1st April to 31st March. 1st April to 31st March, that entire turnover will be added. So here, what is the turnover, aggregate turnover now? Yes, 153 lakhs. So obviously it has exceeded threshold limit, so he is not eligible for composition scheme. He is not eligible for composition scheme. Am I clear? Everybody respond. Am I clear? Okay. So same next, if you see next example 38. Sir, Vishnuvardhan is registered under GST. He is a trader of goods in Tamil Nadu. Financial year 22-23, he has made an aggregate turnover of 143 lakhs. 23-24, he has opted for composition scheme. 23-24, his aggregate turnover is 183 lakhs. What is his GST liability for 23-24, in which he has opted for composition scheme? Normal GST rate of the goods is 12%. Sir, his aggregate turnover in that year is 183 lakhs. He is opting for composition scheme. He went for composition scheme and opted and did the turnover 183 lakhs. And you understand, aggregate turnover till it touches the threshold limit, that is 150 lakhs, only he can enjoy composition scheme benefit. After crossing 150 lakhs, so till 150 lakhs, he can pay GST at composition rate 1%. But after crossing 150 lakhs, balance 33 lakhs, he will pay GST at normal rate 12%. So his total GST liability in that financial year 23-24 is 5,46,000. Okay. This is the answer. Now, one last question for the discussion. So that is my suggestion is, those who are watching the lecture in YouTube, pause the video and try the answer for this, then continue and check the answer. Pause the video and check try this and then check the answer. You online students, tell me the one. Yes, Suga, correct. So in the previous one, this 150 lakhs I will pay from my pocket. This 3,96,000 I will collect from customer and pay to the government. Correct. And during payment of this 3,96,000, I can also use ITC if at all any I am having. Clear? Okay. What is the answer for this? Sir, here please understand. This financial year only I have started business. This financial year only I became liable for registration, and I have opted for registration, and I have opted composition scheme also, and I have made 183 lakhs turnover. So understand, aggregate turnover till it touches 150 lakhs only I can enjoy composition scheme benefit. Correct? I have made 183 lakhs turnover. Correct? I have started from 0 and went up to 183 lakhs. But I can enjoy composition scheme benefit till 150 lakhs. But in this 150 lakhs also, up to 20 lakhs I am an unregistered person. Up to 20 lakhs I am an unregistered person. I repeat, from 0 to 183 lakhs I have made the turnover. I can enjoy composition scheme benefit until my aggregate turnover touches 150 lakhs. But sir, during this period I was unregistered up to 20 lakhs. That means this period, even though you add this 20 lakhs, I repeat, even though you add this 20 lakhs for aggregate turnover, you will not compute any tax there, and tax liability is 0. But while calculating the composition scheme benefit availability, the aggregate turnover includes the 20 lakhs. But the 20 lakhs, you would have not paid any GST because you are not a taxable person. Not a taxable person. This 130 lakhs, this 130, you can happily enjoy composition scheme benefit. So on this you will pay 1%, and balance 33 lakhs you will pay 12%. So the previous question and this are not same. In the previous question, you are already registered in the last year, you have been like doing some turnover. This year you are taking composition scheme benefit and doing. In this question, the difference is this year only you started business, this year only you became liable for registration, this year only you took registration and opted for composition scheme also. And what is the tax liability in that particular year itself we are calculating. So it is different. So you have one past exam question also, or RTP question I guess, but it is based on section 10 subsection 2A. So the threshold limit will be 50 lakhs. Here 150 lakhs you are seeing threshold limit and doing the problem, but that problem will be with the threshold limit of 50 lakhs, right? So that is what all about composition scheme, my dear friends. Is that clear, online students, everybody? So with this we are done with composition scheme. So we'll end this. So okay guys, next after the break we'll go with place of supply provisions. So finish your dinner and let us meet after the break.